It unfortunately doesn't look all that great, and it's very difficult to say whether we are nearing the end of the painful period. It may well be a long, protracted one. But welcome to the trade setup. And US shares, key global news. US shares slid to about 13-month lows, and the Nasdaq had a very rough day in trade yesterday as well. Rupees fallen to a record as the dollar strength tends the risk mood. Bitcoin's unraveling hits 50%, more than 50% from peak, with a drop below $31,000. So it's a risk off across. And by the way, in slight whiff of good news from an India perspective, even crude came off at trade yesterday. So much as oil has been on a bit of a boil, yesterday's session saw crude also come off about 5 or 6%. Of course, because of the Chinese demand issues. So all in all, a strong risk off that we have, and we saw that in the U.S. market as well. The downfall continued. Nasdaq in particular had a very rough patch, but the Dow and the S&P too did not do well. And it's showing in the way the Asian markets or the SGX Nifty is behaving. For example, you would probably see a gash 100 odd points, 150 odd points on the SGX Nifty as well in the session today. And on Q about 105 odd points, 0.65%. Actually, you have to admit, relatively well behaved despite the fact that the US futures are not trading in the green. So how to approach trade in a scenario like this? First, helps to maybe just take a quick glance at what happened at the broader end of the spectrum yesterday. Remember, we were off from the lows in the session yesterday, but the advanced decline was still weak. So the advanced decline ratio was at 100 to 395, which is about 1:4. Look at the set of gainers versus the losers, right? So stocks like Jamna, Auto, Cholafin, very, very individualistic names, Fine Organics, essentially companies on the spec chem side which have some pricing power have done okay. Otherwise, an SRF might be a candidate today, but everything else came off. Privy down about 16%. MTAR, CSB Bank, Vardhaman Textiles, Gujarat Ambuja Exports. Textiles used to be a safe haven, and that is actually coming off as well. So a bunch of these stocks, most of which don't have pricing power, are actually taking it on the chin and shouldn't come as a surprise. So what's the trade setup therefore for the day like? Well, I think the risk of prevalent and likely to continue to impact the Indian markets today largely. Oil upstream, remember, has been outperforming, but may come under a bit of profit booking period today. Let's wait and watch. And the only contra is that while IT services are in a bit of a downdraft, and yesterday were not, because if you see the one space that stood out yesterday was IT services with what TCS, Infosys, etc. were doing. Think of it this way: that yes, IT we know has a bit of an issue, but sentimentally, if indeed the dollar index were to strengthen, if the rupee were to weaken from yesterday's rough ending to even further, right? So we are at circa 77 quarter. What if we go down to 80, 82? And if we do that, how big a sentiment booster would it be for IT? Also because it makes Indian IT exports that much more viable as well. So how big a booster could that be for IT services? And therefore, could there be a contra trade out there? That's the question you've got to ask yourself. If I don't have an answer to that, I'm leaving you with the thought. Because they are largely underweight, right? Most people are saying, oh, IT services is not that great. Very few people want to go out and put money into IT services. We'll have a conversation with Nilesh Shah of Envision today. He's a long-term IT watcher. It's at 10 a.m. on Talking Point, and that could be an interesting conversation or point to question him about. What about results today? Can they help? Well, Asian Paints usually pulls a rabbit out of its hat. Could this time around be the same? I think we'll watch out for that, as also Cipla. From amongst the broader end of the spectrum, the likes of Chalet, Awadh Sugar, the gas companies, Polycab, Welspun India from the textile space, all of these would be very, very important. And viewers, keep in mind, the other big factor is now that the known events are out of the way, right? There's a big thought of what LIC IPO could do to primary market secondary market liquidity. LIC is out of the way. The surprise element from the Reserve Bank of India is out of the way. What the Fed is going to do is known and out of the way. The impact will be there. But is there a surprise element around the corner which could be negative in nature? Of course, surprise is meant to be something that is not known and can't be gauged. But what I'm saying is the big event. Let me qualify my statement. Is there a big event around the corner which could derail sentiment, so to say. That is now becoming increasingly hard to find. Is that a small positive? Time will tell. For now, though, the markets continue to strike lower. There's somebody's asking about whether markets down and the impact on LIC IPO itself. Well, yeah, it's very difficult to say whether LIC will make money on the day of opening or not, or whether it will make money in the first 1 month or not. Insurance per se, and I'll come to that plate, by the way. Maybe, Virat, if it's possible, we can start off with that plate and then move on to some of the others. The insurance, look at this, what's happened near term, very near term, and this may very well change in the month of May. But April life insurance trends have been strong. Total APE increased by 56.5%. Private APE, private sector total APE increased by 41%. And it was 22%, by the way, in FY22 in the same month. But LIC, which was just 7% in April 2000, FY22, was up by 77%. So there are some, how do I say, green shoots, if you will, for LICs and IPO as well. A bunch of people have invested. Hopefully, over the medium term, they all make money. Very difficult to say really what. I mean, if the Dow continues to crack the way it is, no matter how strong fundamentally and how valuable LIC might be, I doubt it can really create wealth on the day of open. Slightly medium term to long term, could well. But having said that, that is one thing, the LIC IPO and what it could do. Difficult to gauge really, but suspect it will start lower, looking at the market, the way the markets are. But SBI Life, no, let's stick with that plate. SBI Life, the total AP was very, very strong. So from amongst the listed space today, SBI Life growing at 75% could well have some positive cues. HDFC Life, a bit disappointing, you have to say, just 12.8%. And individual policies sold were down by 5%. So not the best of numbers for that one. ICICI Prudential probably did okay, both QOQ and YOY. So that is good stuff. Okay, so that's about insurance. So we'll come to some other themes in a bit. There are some queries, we'll try and take them. But first, some stocks to monitor in the session today. SRF, numbers look rock solid. Revenues up 6%, EBITDA up 7%, EBITDA margin 26.71%, and net profit up 19%. Now, viewers, the key is in SRF that much unlike what most of the specialty chemical companies have done, or chemical companies have done, which is report lower margins, including Navin Fluorine yesterday, viewers, as I said, SRF has maintained margins. I think it's a big vote of confidence in what the management has done. A quarter does not make a year, but it's a strong quarterly update, a strong close. I think the con call would be important. I suspect the con call is today, but let's wait and watch. The chemical business revenues are about 10% QOQ. The technical textiles business came off. Packaging film business did okay. And they also approved a capital expenditure of 115 crores for Eradicate facilities to produce intermediates for agrochem in the new plant structure at the Dahej. So going ahead with CapEx, strong quarterly end, margin maintained. Maybe the street may want to reward it. Let's wait and watch. GNFC, very strong quarter. Again, if the stock reacts, you know why it is reacting. Revenues are up 60%, EBITDA up 88%, EBITDA margin at 32% versus 27%, and net profit up 108%. You couldn't find too many faults with the quarter. So if the stock reacts, it's on account of strong results. KEI Industries, revenues are up 43%. EBITDA margin came off a little bit, not too much, but very strong revenue growth and decent enough profit growth. Again, on a bad day, if this stock is in the green, you know why, the quarterly numbers. Again, I don't have a handle on the estimates, but I suspect that the quarterly performance per se is very good, and therefore it should help. As also maybe from Godrej Agrovet, wherein the revenues were flattish, but the EBITDA margin performance was very strong, and net profit, therefore, there were some one-offs too, but did reasonably well for itself. So good going for Godrej Agrovet. Maybe as a stock could react, though the street may be disappointed with the top line performance as well. So that's the other thing you've got to watch out for. Dalmia Bharat, a bit of a disappointment. EBITDA margins at 20%. So that's an issue. There was a Bloomberg story which I thought I should bring to you in light of the fact that Reliance Industries had a sharp fall yesterday. Now, this story suggests that the Jamnagar facility of Reliance is lifting crude processing, which is the quantum of crude that it processed, is deferring the planned maintenance to take advantage of the surging demand for diesel in Europe. It's already sending shipments of the fuel to Europe, and this will increase in the coming months as per this Bloomberg story. So Reliance might actually have a fairly decent performance if indeed they manage to do well, if indeed they continue with these shipments, for example. So keep this at the back of your mind. Reliance Industries uh, could be fairly interesting as a thing to ponder on. Now, what else, viewers? I just thought I'll look at my notes and try and figure out if there is something else. So one, of course, we spoke about SRF and GNFC and KEI Industries, which did as well as Godrej Agrovet. So no surprises thereof. Yeah, amongst the weak companies, I thought maybe RT Drugs was slightly weak this time around. Margins hit an all-time low of 13%. Even if they expect a reversal, maybe this quarter would mean numbers could mean the stock could be under a bit of pressure. And yeah, could be interesting. Also watch out for stocks like Ambuja, because I think Financial Times is saying that JSW has made a $7 billion bid for the India business, wholesale India business. So ACC Ambuja remain in 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 the picture as well. So those are a few names, viewers, that you have to keep in mind. Lastly, I don't have views per se. I'm a journalist. I can't have views on specific stocks. But yeah, there are people who are talking about whether time is right to add IT or IT services. Well, like I said, the street is underweight. If the currency depreciates, it could be a sentimental positive. And I will ask this question to Nilesh Shah of Envision today at 10 a.m. He joins us on Talking Point, and we'll do a slightly extended conversation on Indian IT services. So maybe that's something that you might want to tune in for as well. But yeah, the street is underweight. The currency is weakening. Who knows? Yesterday's move, if that was a sign of what is in store for IT services. Thanks so much for tuning into the trade setup today. Have a safe day ahead. If you're stepping out, please try and remain safe.